Good evening, guys. How's everyone doing? How has your weekend been? What'd y'all do over the weekend? And how is the sound, by the way? Is the sound good? The picture good? Is the stream quality good? Before we get going here. Great. Perfect.
Sound isn't echoing.
Is the sound echoing for anybody else?
Paul says sound is good.
Perfect. Perfect. All right. So we're going to go through Bitcoin. There's a couple things I wanted to show you on Bitcoin, and then we're going to go through a Q&A. We're going to try and keep this live stream about an hour and a half, just so it's concise and we don't have to belabor it too much. So we're going to spend quite a bit of time on Bitcoin here, and then we'll take some questions towards the end. Just give us 1 second, guys. Just ironing out an issue here. All right, so we're going to get started here, and we'll go to the daily chart here. Let me turn over to my screen here. Give it a minute for it to sync up. There we go. All right, so on Bitcoin, we may be entering an area where we could see a potential sell. Now, there's a couple variables with this. Because of the pattern in the way it is forming, we could get that buy setup. But we have to understand that that buy setup can just reject. And when you're trading, you always have to be of the mind, what can the market form? If it does X, can it form Y? What is the pattern? What is the bigger pattern that can form? So if we look at the daily chart here, we can see that it is possible that this pattern comes into play. Why is that possible? Because of this pattern right here. So this may not make perfect sense to you straight off, but you'll see this pattern quite a bit. You'll see a smaller flag, it sells off, and then it comes right back up, retraces that, forms a bigger pattern that is very much like the smaller pattern. That pattern completes, and then we see the sell. That is a possibility. We could see that take place. We could see that happen. So if we look here on the daily chart, you can see we had a small correction here, quite a big impulse, and then it's been a bigger correction here recently. So if we jump down here to the 4 hour, there's a couple things here worth noting. So in the video on YouTube a couple days ago, we were talking about this pattern. And what we said is, it's very likely, since we had this pattern here, it was up here, we broke it slightly, but then it was very corrective. It's very likely for this to reject here, come back up. That's what happened, but you have to look at what happened once we impulsed straight back up. We went into this correction again. So we didn't actually clear the high of the pattern, and that is how you know the pattern is completed. So if we break out this, if this would have impulsed out, cleared the high of the pattern, then you would have known, okay, there's no way you just evolved the trend line to meet it. But we didn't get that, and the pattern is still valid. So if we jump down to the 1 hour here, you can see kind of the movement we're seeing. So this is corrective. We got the impulse down, and then we had this corrective movement. I know quite a few of you were looking at this sell setup here. That was valid, but it's important to understand with those setups, because the pattern is there, we can get that sell setup and then it just rejects and goes straight back up. So that is important to know. With this pattern here, it is ascending, but we have the bigger pattern that looks like this, right? And the bigger pattern looks like it could potentially be giving us that buy setup. What is important to know about this is we could get to this high, the high of the pattern. If we don't break the high of the pattern impulsively and we do it correctively. So let's say this pattern here, we do get that buy, and then it just moves correctively. It breaks through the high of the pattern, moves correctively up to here, we get this ascending channel. That's going to give us the indication that this is not going to progress past, and we're going to actually see a reversal off of that. The reason why I would expect to see that reversal with corrective nature is simply because of how price action has been moving. So we had this correction, we had an impulse up, another correction, an impulse up. Now we have a much bigger correction, but it's not your standard correction. It's a lot more drawn out, it's a lot bigger. You would expect that, but this part right here is where I would expect that this may be actually setting up for a reversal, because we did have this pattern here. You can see we were looking at that. We broke out of it, but we broke out very correctively, and any movement out saw very little progression. And so if we just delete this and look at the pattern for what it is, all we have here is ascending movement. And so it is possible at this stage to get a buy straight up out of this. And if we zoom in here, we do have that nature forming. So you can see we have a small impulse up, and then we have a small flag setup that would end up in a buy. That is a buy setup. It's important to know about patterns in general. If you're in the middle of a pattern and you see a setup like this, because it's the middle of the pattern, it can go both ways. Now, if you see it outside the pattern, that's a different story. But if you're trading within the pattern, that's a little bit higher risk because it's still developing. The pattern is still forming. The structure is still forming. So in this case, we could get this buy setup. It could go up to here, correct down to here, and then we could get more of an ascending like this. All that would do is just change the angle of the pattern. We get the exact same pattern. And if that happens, we're going to see this reverse. So what happens if we don't get that and we do get a buy setup out of this? Zoom out a little bit here. What happens if we get a buy setup straight out of this, but then we don't get any corrective movement at all, and we break straight through here, maybe even correct, make a small flag, and then, hang on a minute, we break straight through, let me get my thing back, break straight through, maybe correct a little bit, and then impulse straight up through, maybe we even break that. If that happens and we see a clear impulse, that is going to give you the indication that this buy is going to go further and it's not going to reverse here, it's not going to reject here. The other caveat to that is if we do get there correctively, or excuse me, if we do get there impulsively, but then we see a rejection, a candlestick pattern to reject, that would give you more of the override if we don't get that corrective nature. So for example here, if we just look at what we had previously in the pattern, it came up to this point very impulsively, right? This point was very impulsive, this whole leg was very impulsive, but it came up to this point, we got a rejection candle, more of a high test candle, and then this retracement candle. That gave you the indication, okay, this may not be going too much further. And then when we came straight back up and then rejected again, we got that retracement candle again, that further compounded it. We did get the impulse up, but then we got that clear rejection in the form of a candlestick pattern. That gave you that indication that, okay, this is either going to reject straight off here and just drop, which is less likely than forming a bigger pattern, and we did get the bigger pattern at this stage. So there's a couple scenarios there to watch. if we do break straight through, obviously we're going to be looking at the targets that we looked at in the YouTube video. So for example here, if we did impulse straight through and we don't get any corrective nature at all, and maybe get a correction here on the trend line and then get that other impulse up, we'd be simply looking at this high as a good solid anchor point to watch. Now this is not a point where Bitcoin has to reject and has to reverse. This is a point where you would get there and you would watch and see what price action does. So a lot of things a lot of traders do is they will see a point like this and they would treat it like it's set in stone and that it has to do that. And if the market has to do something for you, then you have to check yourself, because you have to understand that the market does what it wants to do. You have to let the market do what it's going to do and then trade it accordingly. So with a level like this, you're simply looking for rejection off of that. So that's a good question. As far as drawing trend lines, I like to draw them straight to the wick. What I found is that it is more accurate. It gives you the most accurate form of the pattern. Now you can cut the wick off, and in some cases, like with extreme volatility, I will cut the wick off because it's just not relevant. It's a case of maybe news or just a large buy order, something like that. I'll cut the wick off. But in most cases, I'm going to draw it straight to the wick because that's going to give me the most accurate form of the pattern. And you'll notice as you draw these patterns out that they react really well straight on the wick. So that is a good question. If we do break through 10,000, I think we're going to get patterns along the way before we get there. So it's not just going to be one straight impulse up through. We're going to get impulses and corrections on the way up. But if we do break 10,000, what I would be looking at is this area right here. So we've seen in this area here rejection in the past, and it would be very likely if this pattern here doesn't play out and we do get that buy straight through to see a rejection either here or here, simply because of how it has reacted in the past. But it doesn't have to, and it shouldn't be, you shouldn't see it as the market has to do that. So those are some of the targets we're looking at if this doesn't play out. But as of right now, I think it is very, very possible to see this play out, simply due to how we have moved and just looking at the history of how Bitcoin has moved, how it behaves. To see this reject here and then sell would not be unlikely at all. You know, we do have the beginning stages of this ascending channel. And so again, like I said, to compound this, we have an ascending channel. If this just corrects ascendingly like this, we get another ascending channel within it. You know, that's going to be excellent. That's going to be a very, very high probability sell. But you do have to keep in mind that the sell is not the only scenario. Because we do have this pattern here, getting that buy is very possible. But you have to understand that if we do get the buy, you have to be on your management game and really understand, okay, are we going to reject here? If we don't reject there, we're looking at the trend line. If we see no reaction at the trend line, okay, then we're holding that trade. That's totally fine. But you have to have that in your mind so that you're not shocked, let's say, if it does reject here at the trend line or even here at a double top area. Because if you're shocked, you need to really focus on learning how the market does react. So NVT signal charts. I haven't actually heard of that. Is that like a signal service?
I'll look it up.
I'll have Randall look it up here and we'll see what that is. If that is a signal service, I don't use signal services and I wouldn't recommend anybody else use them either. Here's why. Signal services are based on somebody's understanding of the chart, right? And maybe their understanding is good, maybe it's not. And if you actually backtest signals, and I did this when I first got into trading, I was all into signals, all into signal services. And what I found through that is that they're not super reliable. Sometimes it might work, and even if it does work and they give you the right setup, you won't understand how to take the trade because you don't understand how the market works. So if you understand how the market works, you can see that for yourself. And I've found that the signal services don't give you the most accurate data. So for me, I don't use signals too much.
This is market cap versus USD volume flowing to the blockchain. It's like the P ratio of Bitcoin.
Oh, okay. I see what you're saying. It's the value of the network based on transactional data based on use. I see what you're saying there. I don't know that there's a huge correlation between that and price, because I don't know that there's a ton of people watching indicators like that. It is interesting to watch that and see how Bitcoin has respected it in the past, has responded. You know, obviously, if you have a large amount of transactional volume with Bitcoin, you're very likely to see more movement in the charts. If you don't, you know, you're not likely to see as much, or maybe it's going sideways or something like that. But I wouldn't say that it has a huge bearing on future price movements. So with, you know, it can predict the top, and the reason why that is the case is when you're nearing, let's say, the top, and I'll go to the daily chart here. And it is interesting. I'm not discrediting it, but I don't use it on a day-to-day basis because I found that the chart actually gives you the patterns and the direction to trade. But as far as predicting the top, whenever Bitcoin is running up like this, you're going to see transactional volume increase because you got people buying in, you got people selling, you got people moving it between wallets, moving it to exchanges, doing all sorts of things with it. But then once you get to an area like this, and let's say it starts to drop, anytime you see a drop or any kind of movement off, and on a lower time frame, that's going to be more evident, you're going to see transactional volume slow down. And maybe people are selling it and waiting to get back in. Maybe they're just, the interest isn't as much because the price is going down. Nobody wants to buy it when it's going down. So it is interesting, but I haven't actually used it that much, and I wouldn't use it as, let's say, a leading trading indicator, simply because what I found is patterns on the chart are going to be the most reliable for you to trade.
So people ask.
So that's a good question. How would I take this trade? That is a great question. You know, I think a lot of times you go through the scenario, but then you don't actually show how to take the trade. That's a really good question. With this trade here, you know, if we were looking at this as a buy, and this is valid, this is a valid flag, I wouldn't just set an order. Like, I wouldn't just see this flag going on and then just set a buy order in here. I wouldn't do that because it could just, you know, it could randomly drop, right? And you don't want to be stuck in the trade if it's dropping. But with this here, because it's so close to the top of the trend line here, I wouldn't be taking this trade unless we got a clear break up and through that trend line. If we do get, let's say, a break up through and then it breaks above the trend line, I would be having my order up here. So I'd have an entry order right up here. And you have to understand with that, there is some level of risk, because as we've seen in the past, Bitcoin can wick up and then take you in. It goes up a little bit, completely retraces on the same hour. So what you can do to combat that is you can actually wait for the hourly close. The problem with that is, as you can see here, we can get hourly candles that are huge. And so you really have to weigh the risk and if it's in your personality, it's according to your skill set, you can take this trade. You just have to be aware that you may have to manage it quickly. If we do get, let's say, a rejection like this here, and it spikes up and it looks like it's going up, and then we get that complete rejection, okay, I would be out of that trade. I'd be closing it. If it's break even or it's a small loss, I'd be out of that, because the pattern's either changing or Bitcoin is not ready to go just yet. So as far as taking that trade, I would have an entry order just above here to get tagged in, understanding the risk that you could get tagged in here and then it rejects. Also understanding that we could just reject at this area here or the trend line. So with Bitcoin, we do have an interesting pattern here. It is a flag, and there is enough hours in it. If you look at it mathematically, there's enough hours in a flag like this to take it as a trade. You're looking for between 6 and 8 hours in a flag to make it valid. We do have that in this flag, and so it is valid. If we do see a break above, you could take it really aggressively, set an order here, but understand that there's more risk in that. If this doesn't just buy straight out of this and it kind of cracks like this, then we can see a clearer pattern. It'll be right on the trend line. That'll be even better as a buy setup. So a couple ways you can take that. If you do take this as a trade and then it breaks up and then cracks like this, you can hold that trade, but understand that if it's correcting in an ascending manner, it's not as likely to see this correct in an ascending manner and then, let's say, just break to the upside randomly. It's less likely for that to happen and more likely to see that reverse. So you can still hold it, but just understand that you may have to manage that more quickly if it does give you that rejection. So with a pattern like this, if we did get an ascending and I was in a buy, I wouldn't just close the trade because it's an ascending channel. What I'd be looking for is a break of the ascending channel. If it broke below the ascending channel, I'd be out of that trade as a buy. So hopefully that answers your question there, how I would take this trade. So as far as pennants versus flags.
No,
Oh, horizontal patterns. So with continuation patterns, you can get a horizontal pattern. Like, for example, this here. This pattern here was horizontal, right? A little bit more horizontal. That's perfectly valid. We don't necessarily have to see a descending flag. That's going to be the go-to setup. That's going to be the picture-perfect setup you're looking for. If we do get that, it's going to be even better. But we can just get more of a horizontal flag like this and then see that break to the upside. What you don't want to see, and what is a lot less likely to see play out, is a ascending. Like, it's very unlikely to see a big ascending pattern like this just break to the upside. A lot less likely to do that, but as far as horizontal or sideways movement, that is perfectly valid as a continuation pattern. What you want to understand about it is the context. So, did it come from an impulse? Did it come from heavy momentum? Did it come from volume? Or maybe it just came from more corrective movement. And we went from corrective movement to more sideways movement. Then you have to address that in the form of the pattern and see what the pattern is giving you. But if we do have an impulse up, we have momentum on our side. Whether the continuation pattern is horizontal, sideways, descending, if it's a clear flag or it's a bigger pattern, it's more likely to see that impulse out to the upside again if we have momentum on our side. So it's a good question. On Tether, I haven't heard any new news. I think eventually we're going to see that come to a head, obviously, and I think that day is coming very soon. But obviously the Justice Department doesn't send out notifications and let us know, unfortunately. But I think there's only so long this can carry on. One of the interesting things we did see is with the ETF denial, one of the reasons they cited for the denial was manipulation in the market. If they're citing manipulation in the market as a reason for the ETF denial, it's going to be something they're looking at very closely. And so I do expect the Justice Department to get a hold on this very quickly and we'll see that hopefully get taken care of and a lot of the bad stuff in the market get taken out. That would be really good. No, it's still on there. Is the video still good? It just went offline for a second. All right. Not sure why that happened. I think we're good though. Hang on a minute. It says video output low. Let me check on that. Alright, we should be back now. I don't know what went on there. This is a very solid internet connection. It is broadband, and it should definitely not be having any issues. So let me know if the video and the sound is back and it's all good before I continue here. So as far as Bitcoin closing higher, I wouldn't necessarily see that as okay, that is an absolute signal in one direction or another. You can look at these patterns here on a monthly chart, and you'll notice, let me turn off my drawing tools. Here we go. You'll notice that this candle here didn't necessarily mean anything, right? So we had an impulsive candle down. The next month was very impulsive to the upside, and then it just retraced, right? So with the monthly chart, there's simply not enough data there to really draw a solid conclusion from. Just not enough there. So moving averages. Let me actually add them on here, and we'll show you kind of why we don't focus on them a ton. So let me add a couple moving averages on. What are the ones you guys are focusing on? You're looking at the 200-day and the 50-day, is that correct? And you're looking at MAs, not EMAs, right? So if I just look at the 50-day and let me make them different colors here so you can see them better. All right, so with these moving averages, you can see that sometimes, like here, it breaks straight through and then comes straight back through the moving average. And so in this case, if you're trading moving averages, for example, maybe you would have taken this trade because we closed above the moving average, but then what happened? We went straight back through it. What the market was responding to is not the moving average. It was responding to a pattern there. And that's important to note. It's easy to get caught up in the moving average, but what we've found, and we've done this, we've traded the moving averages, we've used EMAs, we've used all sorts of stuff. We've traded every strategy that we could find back when we were learning. And what we found is that it was very hit and miss. Sometimes it would work, and like in this example here, it didn't, there's nothing here, right? And what you'll find with moving averages is in a trending market, they can be valuable. But then in market conditions such as this, sometimes they don't give you the most accurate of signals. So if we do get up to here, and let's say the moving average is right there, and you can use that as an extra point of confluence if that fits your style. But as far as it goes, we've noticed that Bitcoin does respond, but the pattern is going to be the most important. It's going to give you the most reliable data.
He said it's impulsing. We'll ask about the player flying. Bigger flying. I don't know if it's impulsing or not.
All right, so somebody said it's impulsing here. So let me check on that and move the moving averages. There you go. So there's that buy setup. But, with this, you could have had your entry here. But the reason why this is higher risk is because you could be tagged in here at the break of the flag, but then the pattern is right here, right? So it could reject right here at the pattern and then fall straight back through. If we do move up through here and then close above, that's obviously going to be a decent signal for more move up. But this is more of a descending movement as of right now. So seeing that impulse up and through is not unexpected, and that's just what we were talking about there. So to trade this, let's say you want to get in on this trade, at this stage, you're going to be really close to getting in. But like I said before, you could have an entry just up here. But again, the issue that you have to weigh the risks with that and understand that this can just impulse straight up and through and keep going, or it could do something like this. And so watch that. If you're not already in the trade, watch that. If we do get an hourly close and it closes up here above the trend line and it is impulsive, that's going to be very interesting to take a look at. Is there any volume? I believe volume has been lower. Let me add that on here really quickly. All right. So obviously there's more volume now. The price is moving up. As you would expect, when you have a pattern, volume drops off. It's pretty natural for that to happen. But again, volume levels have been lower. And I don't think you're going to see extreme amounts of volume until we get some of the manipulation items cleared out of the market. I think there's a lot of money waiting to come into the market that is not going to be there unless we get that cleared out. So I think we will see more volume in the future for sure. MACD. So MACD is an interesting indicator, and it's one that we both, me and Randall, used when we were learning to trade. It's kind of the same with RSI. MACD and RSI can be used together, and they're very similar in that regard. Again, what we've noticed with all of the indicators, and we've used them all, those are going to be the most reliable, the RSI and MACD. If you're going to base a strategy on indicators or use them as extra points of confluence, those are going to be the ones to use, both MACD and RSI. The other ones are kind of hit and miss. What they did a study and they looked at RSI and they found that it can be very useful. And so I don't use it because at this stage I've went through it and I've used them and I've not used them. What I found is my trading doesn't improve using them. And just looking at the pattern and the structure and the nature of price action gives me more than enough information to take the trade. But if you want to use it, MACD and RSI are going to be the two best indicators that you can use. Appreciate that, Mr. B. Only 2% of Americans invested in Bitcoin. It is true that very, very few people have invested in it. With that, it's important to note that I think a lot of Americans, there's still the stigma behind Bitcoin that it's a bubble, that people have heard the manipulation things, people have heard the accusations, people have seen the fraud and the exchange fraud, the hacks. And at this point, in the majority of people's minds, it is either a scam or it's just not safe enough to invest in, and it's kind of like gambling at this point. I think to really fix that issue, we have to get it to a point where we can't have exchanges that do whatever they want. And then you're going to see more Americans start to get in on it, because then it's going to be stable, then it's going to be reliable, and it's going to be repeatable. So with harmonic patterns, I've seen people use them. My thoughts on them are they're interesting. They're interesting to look at, to gain data, to really research the chart and glean data from the chart. For trade entries, for everyday trading, it's going to be tough to base a trade on a harmonic pattern. It's going to be very, very tough because it takes a very high level of understanding of it to apply it properly, and then just finding the entry is going to be really tough. So they're interesting to look at. As far as trading them, it can be a little bit tougher to get right anyway. So moving averages are interesting, and I know what you're talking about there. A lot of people do use them, and for that reason, there are some cases where you'll see it actually seem to respect the moving average. But what you'll notice, and I would challenge you to look at where moving averages are respected and see if there's actually a pattern there. I would say that nearly every single time there's going to be a pattern there that the market is actually responding to. And like I said, maybe you can use the moving average as another point of confluence, and I'm not discounting them altogether, but you'll find that the pattern is what the market is actually responding to. And you can use the moving average with it if that suits you and you are into that. But just looking at the pattern is going to be very, very reliable. That's what we've found. So as far as evolving the trend line, that's a good question. So how do you know when to evolve the trend line? You know, obviously you could just keep going with it, right? And just keep going up and up and up. And eventually it just gets ridiculous and you realize, okay, I can't just keep doing that to fit my bias, you could say. How I would evolve the trend line is, this is a great example. Because we previously had this, we had this pattern here. We broke above the pattern, but look what happened. We corrected right on the pattern, moved up, rejected straight off right at the high of this impulse. What that tells you is this is not progressing. This is just more corrective movement. And what you can do at this stage is simply evolve the pattern. Now, with this, it's important to note that separating the pattern is very important as well. So you can evolve it, and that is valid, looking at this. But also, you can just separate this. You can move this back, and you can look at this pattern on its own. And what that's going to do is it's going to give you the most accurate and the truest sense of the pattern. So in this case, you can see we have this pattern here. It is possible to get a rejection here, right? That is possible. So if you were in this trade and you took it, it's possible to get a rejection here simply because we have this pattern. If we do get that and it moves straight back down, then we know that it's just more corrective movement. This pattern is just getting bigger, it's expanding, and it's just going sideways. If we break above, let's say here, and then we just correct. So let's say we break this high and then just correct and come right back in. What that would do is we know, okay, there was no progression. We can evolve the trend line. When you're evolving the pattern, you're simply looking for little to no progression. If it impulses straight through, don't just evolve the pattern to fit what you want it to fit. But if there is no progression, then you can evolve the pattern. You can see it much more accurately. And so that is definitely a good question. And that does take experience. You know, you're not going to get it straight away and be perfect at it. It takes experience and really understanding the core behavior of the pair you're trading to really get it right. But when you get it right, it's very, very powerful. But for evolving, we're looking for little to no progression. How many hours is the course? We haven't actually timed it, but I know that there is at least 10 hours of content in the course. I believe there's more than that, between 10 and 15 hours of content in the course. So there's quite a bit there. The videos are between 10 to 15 minutes to as much as 30 minutes and a little over 30 minutes. You know, we do go in more depth on some topics that require it, because obviously there are some things that need more time to cover it. Evolving patterns is what we talk about in the course. We have a long video talking about that, evolving a live market, showing you our thought process on a chart that we're actually trading. We're actually looking at entries. So that is really powerful. And so there is more than 10 hours. I'm not sure exactly how much. We haven't actually timed it, but we should probably do that, get you an accurate estimate.
We'll be adding more to it.
And we will be adding more to the course. We have gotten some suggestions. We've gotten some feedback. The feedback we've gotten so far has been amazing. People are loving it, but there are things we want to expand on, add more content. And so as time progresses, we're going to keep adding and adding as we get feedback and as we get suggestions, as we get people saying, okay, I'd like to hear more about this. We're totally open and happy to add more content. So what would you guys have anything you're looking at for the week ahead? Is there anything on your watch list that you'd like me to cover here quickly before we go straight into our actual Q&A? Is there anything you're looking at for the week ahead? Ethereum. You can look at Ethereum. Let's take a look at Ethereum here. Look at Coinbase data. As you can see here, I haven't drawn on this chart. Did that purposely. I wanted to do it with you guys. So with Ethereum, the pattern is a little bit different and it's slightly clearer for a bear flag. So if you look at it here, I'll zoom in so you can see better. All right, so you can see we have this pattern. There's a couple ways you can draw this trend line here, and I'll go over that in a minute. Let me just add in the top. This is the pattern that we have right now. So with this, you could draw the trend line like this, and that is valid. But instead of doing that, what I would do is have the trend line there, and then zoom in and focus on this pattern on its own. Focus on this pattern in isolation. And I'd be looking at this here. So with this pattern, let me just tidy this up. We'll draw on the top here. And where you draw it in, you're looking for the beginning of the correction. And so you can draw it down here. You know, we could draw it like that. Obviously, that's going to be more of an expanding. I think we can see here is really the start of the correction. You could argue that this is the start of the correction. It really doesn't matter. It's not going to change the pattern. But what we have here on Ethereum, it's very, very interesting. You can see that the entire pattern is corrective. So we had an impulse down, dropped straight into corrective movement, and it's just been corrective. Now we have a corrective ascending channel. So the entire pattern here is a corrective ascending channel. We have a smaller corrective ascending channel within that. And so just looking at the past here, and this is important to note because you may be looking at this and say, well, so what? We have a corrective ascending channel. So what? What does that mean? If you actually look at what Ethereum has given us in the past, you can see like this pattern here. This was a corrective ascending channel. In essence, it was a bear flag continuation. You know, we had a corrective ascending channel here. Again, that was a bear flag. Continuation is a little bit steeper. We had this pattern here. And so with this pattern, it broke to the downside. And so you would expect this pattern here to break to the downside eventually. But what's important to note about this is looking like a sell setup, right? But let's say we do get that sell setup and it just moves correctly down to here. It's possible to get a reaction here down at the trend line, come back up for a third touch to then sell. So understanding that this is looking like a sell setup, but we have to be aware that we could sell, come straight down to the trend line, react, come back up for a third touch here, and then get that sell. So being neutral enough to take the sell, get out of the trade, and then look for the buy, if it gives us that opportunity, is really, really important. So what else could Ethereum do? Currently, we just have this smaller, it looks more like a flag. We're inside of the pattern though, and so if it does just continue to move like this, it's going to be more and more likely to see that sell. But let's say it did just kind of correctively start moving in a descending manner, we'd be looking for that to then move back up. Even within the pattern, we can look for this pattern to fill out, give us that third touch, or even come all the way back up to this here. When you're trading a pattern within a pattern, it is always possible for the bigger pattern to take precedence. In this case, this would be a sell setup. So for Ethereum, it's looking like a sell setup, but being neutral enough to take it and say, okay, that looks like a sell setup, but if we get a rejection there at the trend line, this pattern may go back up for a third touch. Being neutral enough to not get too invested in the sell and understand that it could go back up and reject here at the top and complete the pattern, give us 3 solid touches on the top. That would be perfect if you wanted to take that for a very, very clear sell, and then maybe even a short-term buy from here to here if we do get that. So that's Ethereum. It is very similar to Bitcoin. Bitcoin's a much bigger pattern, but it is very similar, and we're looking at that as more of a sell setup. The bigger pattern is a sell at this stage. It's very, very interesting. XLM. Let's look at XLM here. We'll look at it on Bitfinex here. Actually, you know what? Let's look at it on an exchange against Bitcoin here. Look at it on Kraken because you're likely to be trading this against Bitcoin. So with XLM, and I haven't actually looked at this coin in a little bit, so my reaction is going to be very, very live here. So we did have more of an impulse to the upside here, and if you just look at this here, it's very corrective. The whole movement is corrective. And so if you're looking at this, you can actually see a pattern here. You can draw this in as a pattern. So currently, there is not a whole ton to trade. The reason I say that is it's just kind of trickling its way down, and it can kind of just trickle its way down and continue to do this. If we get to the trend line here and we see a rejection, that's where I would be interested in this. But seeing a rejection is going to be important. In this case here, it was very, very nice. We had a nice slowdown, very corrective movement in a descending manner, and then we got that break to the upside. That would have been a beautiful trade to get involved in. If we get that here, that's going to be great because we have a clear pattern here. It's essentially a triple bottom and the completion of the pattern on the third touch. That's going to be really good. The other thing we can get is if this moves down impulsively, let's say if it breaks down impulsively, we could get this just impulse down, give us more of a low test candle or a doji or something like that, then give us that impulse straight back up. If you get an impulse down and then a retracement candle that retraces the entire move and it combines with structure with a pattern, that's going to be a very, very good trade to take. But you want to take that with a pattern and structure and not just on its own. So that is what I would be looking for as far as a buy setup for XLM. It does look like it's setting up as more of a bull flag continuation. If we do get rejection here, maybe a slowdown like this, or a clear candlestick pattern like this, that's going to be very, very nice to take. And it is kind of just trickling. So if we just move correctively like this even, and the pattern just becomes this, right? That's going to be very, very good for a buy. But keep in mind, with this, the trend line is not absolute. Don't get stuck on the trend line. If this does just continue to trickle down, it's possible to trickle down further than the trend line. But if it breaks the trend line and it is corrective and it's slow movement like this or like this, then you can move the trend line. You can evolve it. And if you look at it like that, did the pattern actually change? Well, no. It's still a descending continuation pattern to then get that buy straight back up. It's still the same, but you just have a bigger pattern now. So don't get stuck on the trend line if it does break through correctively. If it just breaks down through impulsively, well, then you're not in a trade anyways. But what I would say is taking a trade in the middle of a pattern like this is going to be much, much higher risk, because if it's in the middle of the pattern, if there's ever a time where a chart would go one way or the other and it's not very clear and it could either buy or sell, it's going to be in the middle of the pattern. So I'm interested in this as a buy if it gets down here and we do see slow movement or a candlestick pattern like this to reject. So XLM is very, very interesting. So that's what I'd be looking at. Excuse me. That's what I'd be looking at for XLM.
Probably Verge, Cardano, XRP.
Let's look at Ripple here. So Ripple is an interesting pair. So with my back testing on Ripple, let me find Coinbase. Or not Coinbase, Bitstamp. There we go. So with my backtesting that I've done on Ripple, what I found is that it responds very, very well to patterns, and especially continuation patterns. They happen really good and they're very, very clear on Ripple. So it's very interesting. I would encourage you to go backtest it. But if you just zoom out here, you can see that, we are in more of a descending channel on Ripple. I think we've showed this in the past in videos. I know we've showed this in the course. This whole movement here is more of a descending channel. We're going to see Ripple come back to the upside, obviously, at some point. The variable that we don't know at this point is just how long this can just continue to correct and move like this. That's a variable you don't know. But we are in that descending channel. The current pattern that we're looking at is very, very interesting. So let me draw in here the channel, and we'll actually just look at the most recent two touches. When you're looking at a pattern, the most reliable form is going to be the most recent two touches on that pattern. So with this, you can already start to see that we've got more of this descending channel. Because of how it's moved, it's more descending in nature. But if you look at the current pattern, you can see this looks like it's very possible to see more of a bear flag out of this. Here's why. If you look at this pattern here, you can see we had this impulse down, more of a correction, an impulse down, and then this is all just a correction. But with this, we can break the trend line and move correctively like this. That's not going to change the pattern at all. If we do get to the trend line correctively like this, but then start moving in a descending channel right on the trend line, I'd actually be looking for a buy at that stage, because this is a descending channel, and then you get descending nature right on the trend line. I'd be looking for that to buy. But if you zoom in here on a 1 hour, you can see that it's just very, very corrective. It's not very decided at this point. Now we have this pattern here. Let me actually draw that in for you. So with Ripple, I wouldn't be taking a trade on this straight off. The reason for that is this whole pattern here is corrective. We had more of a descending channel here. We had the move off. You could look at this for a descending channel that could potentially break to the upside, and if you're comfortable taking that, that is valid. And if we do get a break up through a solid close, now you could take that as a buy, just understanding that the trend line is there, we could reject. But if we do get a buy here, it is possible, since this is a descending channel, to break, go all the way to the high here, and then what would that create? This is always important to ask yourself, what would that create? This pattern here is what we're looking at. It is possible that this just goes straight to here. We get that rejection here, and then the sell, right? The pattern is still the same. We just get a much bigger version of it. We get 3 touches on the top. It's very, very clear. So with this, don't get too stuck on the trend lines again. Understand that right now it is looking like a buy setup, but this can just correct down like this. But the more and more it corrects, the more it's going to be a buy setup. The more it corrects in a descending manner, the more you're going to be looking for that buy. So ultimately, this whole pattern here is a sell, but within it, we have the potential for this to buy and either reject here, because we do have this pattern and the intersection of the trend line, either get a rejection here and then the sell, or maybe we even break it, go straight to here, get the rejection here, and then the sell. Either way, it's looking like more of a sell on Ripple. So that's what we're looking at for Ripple. Let's look at Verge here. Verge is actually something I haven't traded in a little while, because if you look at it, let's go to a daily. It's been very, very corrective. It's been very much in a descent, and it's not something at this point that I would, let's say, buy, as a swing trade or a day trade. But if you were looking at coins, a lot of the altcoins are cheap, but keep in mind that a lot of them are garbage, and so they're not going to be around in a few years. So keep in mind, when you're buying, you're not just buying garbage. But if we look at what we have with Verge, you can see we had this sell set up here. We had the impulse, a smaller correction. It wasn't very clear. Very, very unlikely that you would take that as a sell. But then we have this pattern here. You can see it's just starting to correct sideways. And at this stage, it's looking like more of a sell. It's looking like this pattern here. And so it's very possible that we move up to here, get that third touch, reject, and then sell. Or maybe we just move down to here, continue to move like this, and then sell straight from here. But as far as a coin to swing trade or day trade, or maybe you're just looking to buy it, I wouldn't be looking to buy it at this stage. Simply looking at where it's been, where it's come from. This is just a very corrective move down. We've had some impulses, some corrections, and it's kind of just trickling its way down. So it's possible that Verge can end up somewhere down in here. And so we are looking for more of a sell on Verge, simply looking at the pattern. Let's look at pound dollar. Somebody suggested pound dollar. Let's look at that. Going to look at it on FXCM because I haven't marked this chart up, and I wanted to show you my thought process going through it. So pound dollar is actually one I'm looking at for the week ahead to trade. If you've looked at this in the past, you probably are aware that we had this big, giant ascending channel. And with this ascending channel, what would you expect to happen? You would expect this to break to the downside. Within this, we had this ascending channel here, So we had that break to the downside, a very, very nice sell. This is one I got involved in. It's a beautiful sell, a very, very good percentage made on that. But the whole pattern was a big ascending channel. We got the clear impulsive break. Because we got the clear impulsive break, we're looking for this eventually to end up down here, right, at the low. Because if you do backtest this, you do your research, what you'll find is, especially on pound dollar, if we break out of a pattern like this, an ascending pattern or a descending pattern impulsively, it's very, very, very high probability we'll get to the beginning of the pattern, the beginning of the correction. So if we jump down to the 4 hour here, you can already see, just looking at this, this is very, very corrective. So you can identify here this descending channel. This is very, very clear. And so if we're expecting the ascending channel to break to the downside, and it does, what would you expect a descending channel to do? Well, you'd be looking at the exact opposite. That would be exactly correct. So with pound dollar, there's a couple variables, right? There's a couple things we have to be aware of. This pattern here is looking more ascending. But within that, we know that because we came from such a clear, impulsive break, and the pattern was very ascending, it was a clear ascending pattern, we are looking for this eventually to come to the downside and give us that bigger sell. But the trick is understanding when that's going to happen. And while that happens, while that forms, we can take advantage of the shorter term trades. So with this, it's very, very interesting what's going on now. So if you just looked at this, we had the impulse down. And at first glance, you could be looking at this as the impulse down. We had a small correction here, and this is just a correction on the trend line, right? To get that break to the downside, get the sell. That is possible. And that is something you have to be aware of. But also understanding that we're getting more of a descent right now. We had more of an impulse up. We're getting more of that descent right now. And so it is possible at this stage to see this break to the upside, come up to here. Maybe we get a rejection here to get that sell. So understanding that if this comes back up, rejects here, okay, obviously that's going to give you more of that flag right on the trend line. It's going to give you that sell. But understanding that right now, it's very much a descent, and it's kind of looking like we're going to get that buy. But we have to watch and see what it does once it gets to the high here with pound dollar. So if it does break to the upside, because this is a descending channel, we get that buy, breaks to the upside, and we combine this with dollar strength. So if you're looking at the DXY, which is the strength index for the US dollar, since pound dollar is based on the US dollar, obviously, if we get strength in the dollar or weakness in the dollar, it's going to affect the price, right? And it's something we have to be aware of when we're looking at potential setups on a chart like this. So we know that if we were looking at this ascending pattern to break and then eventually get to the bottom of the pattern, if this does give us that buy setup there, comes all the way up, breaks through, then we would be looking at the beginning of the pattern here and also here. So we'd be looking at these highs here as more of the points to watch if this does break to the upside, because we know eventually this is going to break to the downside. And if you look at it, what could this give you? If this does break to the upside right now, this could just give you more of this. It could reject here, or maybe it just moves up correctively, rejects off here, moves back down, moves back up, and then we get that sell. Well, what does that give you? My drawing's not perfect, so excuse that. But all that would give you is more of a big continuation pattern to the downside. So that's very possible to get that. But just understanding that what we have to trade right now, that should be in your thought process right now. But what we have to trade right now is more of a descent. And so if this does give us a clear break out of this here, that is going to be interesting. But if it does reject right here at the high, or let's say it goes a little bit higher and it still gives us this pattern here, okay, that's ascending, and we'd be looking for maybe a touch here to then get that sell and the bigger pattern to play out. If there ever was a time where a descending pattern like this would not break to the upside, it'd be when we have this weight behind us, when we have the momentum behind us, when we have this bigger pattern behind us, we have the clear break. It is possible in some cases to see this just kind of trickle its way down and then get that sell. That would be less likely at this stage, but it is very possible. So that's pound dollar. That's what we're looking at. We are looking at the sell. Excuse me. We are looking at the sell, but it is important to note that we could have a shorter term buy within that. Being neutral enough to catch both is really important.
Do Nano quickly, and then we're going to go to PM.
All right, let's look at Nano. Look at Nano against Bitcoin here. All right, so we're on the daily chart. You can see it got listed on Binance and then dropped in price immediately, right? So it got listed at a price higher than people are willing to pay, dropped in price. And as you can see, most altcoins show a similar chart. They've been kind of just slowly dropping, slowly trickling their way down. If we jump down to a lower time frame, this is very interesting. So you can see here, we had a clear sell setup here, right? It's a clear sell setup. We got the impulse down. We had a flag here. We got the impulse down. And then this pattern here is not a clear impulse correction to see another impulse. At this stage, it's not a very clear pattern for that. What it's giving us at this stage is more of this kind of pattern. So it's giving us more of a descending pattern, right? And so just looking at what we've talked about here, if this just continues to correct like this on the trend line, we could see that break, and I'd be looking at that break to get in on it. I'd be waiting for the break, obviously, because like I said before, we don't know that this could just correct and move down like this. Nobody knows that. But what we can do is look at the pattern, get a clear break up. That would be your indication, okay, now we're looking at this. This is something interesting for me to trade. The other thing this could give us is we could get a corrective move down like this, right on the trend line. Get my cursor here. Could get a corrective move like that right on the trend line, get a touchdown here, a rejection, solid rejection, something more like this, a slowdown, maybe a candlestick pattern to get that rejection. That would be a really, really nice buy. The only way this would turn into a sell setup for me is if we do move out, but then it just moves correctively like this, right? If we do get that, then I would be looking for that to sell, but understanding that it could just sell down to here, get that rejection, and then look for that buy. But as of right now, it's a very corrective descending pattern, and it would be not unlikely at all to see this break to the upside, especially looking at where we've come from. This is quite the drop, and so it wouldn't be unlikely to see this just break to the upside. We could look at this as well as this entire move, and this is interesting to note. This entire move is a descending channel, right? And then looking at this pattern here as that descent right on the trend line, and price is getting squeezed. If you're looking at it like that, then this could be very, very close to being ready to trade. And so we do get a clear break above, then that would be where I'd be interested in the trade. If it does just kind of trickle and keep trickling its way down, then, well, you have to wait for a clear break of the pattern. But looking at it like that, that is looking really, really good for more upside on Nano. We're at a point where price is getting squeezed. We could very well see this break to the upside. understanding that we could reject here at the top and then sell, or we could break straight through and go to the high. That is possible. But it is looking very, very interesting. We have this descent on the chart. It's looking like we're going to get more of that buy setup, especially with this pattern here. So that's really good. I like that. If you're looking at trading that, I'd simply be looking at a break to the upside, a clear break of this pattern to then trade. It's looking very, very close. What would be, quickly, let me show you what would be the difference if we don't get that. So if we do look at the 1 hour, you can see this pattern here is more ascending. It is possible at this stage to see this break to the downside, right? Because the trend line is very, very close. If it does break to the downside, to get in on this trade, I would simply be looking for a pattern like this. An impulse down, a retracement candle. So an impulse down, an impulse straight back up to retrace that. That's what I'd be looking at to get in on this trade. Either that or just corrective movement all the way down and then and then a clear break. So that's what I would be looking at for Nano. But overall, I really like it. It's looking like we're going to see that move back to the upside very, very shortly. So that's Nano. At this stage, I think we're going to go and do more of an extensive Q&A, and then we'll wrap it up. So if you have questions, drop them in the chat, and we'll do those. Get to as many as we can. I'm going to switch over to Randall, and we'll go to the Q&A now.
Alright, hey guys. Alrighty. So I'm just going to, while you guys are dropping your questions, I'm just going to answer one question from before that I didn't answer in chat. Before I do that, I just want to say I think we're going to be maybe about 20-25 minutes here, and then we're going to close. We're going to try and keep our timeline as best as we can. We also do have an announcement at the end, so you will not want to leave until the end. If you can stay along, I would encourage you to do so. So one question I got asked was, do we trade stocks as well as Forex and crypto? The answer is actually yes, but not to any degree close to how we trade Forex or crypto. And the reason being is, well, several reasons. First of all, I think stocks are one of the areas actually that longer term investments can be better, especially if you were to get in, for instance, when Amazon came out with, or Google or even Facebook, even though Facebook right now I think is a really horrible investment right now. When it first came out, obviously you could have made some money. So we do have some investments in the stock market, but as far as trading daily, no. And the fees on the stock market are much higher than trading Forex or cryptocurrency. So Forex and cryptocurrency for beginners are like the best. So learn there if you want to go into stocks afterwards. Later on when you're successful, that's an option. But yeah, that's how I see it. So as far as 7 p.m. Time for the live stream, I'm not really sure. We're trying to get you guys' feedback. We're trying to figure out how to do this the best. We are planning to do a morning live stream for some of the people in those time zones where it's like midnight or 3 a.m. right now, and just to kind of show them some love. So for some of you that are in the States, that might suck depending on where you live. But we're trying to just be fair to everybody and then try to find the sweet spot where we can get the most people involved and work from there. So 7 p.m., I don't know. We're open to the feedback. So drop us a note, a comment on YouTube, on Twitter, shoot us an email if you're in the course, whatever, and let us know what time, sounds best to you. Give us like a time frame, that sounds best to you, your time zone or whatever, and we'll try to do our best. Paul, this is Randall, so so I am actually live right now. I'm not a puppet. Is this a tough time to trade? If you're new to trading, it can seem so for sure. And I know there's a lot of YouTubers that are saying it is a tough time to trade. And the reason why people say that is because they don't understand the market. And if you don't understand the market, then yeah, it's going to seem like a really hard time to trade. That being said, with the moves we've seen where you're making $1,000 move in, a day or even several hours, it is very easy to lose a lot of money if you don't know what you're doing. So there needs to be wisdom involved. You need to be careful. You need to really analyze what's going on, make wise entry points. And if you don't have enough information to make a trade, don't make a trade. And afterwards, if you say, man, I should have made that and I could have made money, yeah, but you didn't know. So learn. And once you figure it out, it'll start to click and you'll make more trades, you make more money. There's no rush to make 1,000 trades or whatever, because the rush is there is no rush, really. You need to learn the information, learn how to trade. That's what's most important. So don't get hung up on making enough trades or making money right now. The most important thing, and I can't stress this enough, is to become consistent as a trader. If you can consistently make 0.01% a month, consistently, you can scale that. I know that's a ridiculous exaggeration, but you get the point. You can scale it. So consistency is the only thing that's important to you right now. Okay, so the relationship between the futures and the market, they're obviously, if you look at when the futures expire and when they restart, there is obviously a correlation that can be formed. You can notice there is a move down or a correction usually, and then a move up directly afterwards. So yeah, you could trade off from that. I think it's a little bit of guesswork, and I don't think it's always been consistent, but it's obviously a pattern you can see forming. That being said, it has never, to my knowledge, actually invalidated the pattern. So if you understand the pattern, I think usually that's going to give you better information. If you want to add in some of these things, and you notice that when the futures expire, this happens every time, like you're seeing this, by all means, take advantage of it. There's nothing wrong with that. It's just understanding if that's something that is consistent enough to get involved in, or something that, if you start trading it, you're going to get caught, in the wrong situation. So, yeah, I mean, it's something to look into if that's an interest. Do I think that the pump up was money coming from alt into Bitcoin, or do I think it's new fiat? Honestly, to be quite honest with you, I know that there's some popular YouTube channels, and some of you watch them, I know you do, that are telling you that this is the accumulation phase, that investors are coming in right now, we're seeing big money coming in. All I can really say to that is those people really don't have a clue what they're talking about. I worked for almost 10 years as a consultant for millionaires, for businesses, for startups. I know what smart money does. I know what they do, and I know what they don't do or what they won't do. And right now, we're not seeing an influx of smart money. I'm not saying that there isn't a millionaire that doesn't buy Bitcoin once in a while, but we're not seeing that influx of smart money. And anyone who's telling you we are is lying to you. They don't have a clue what they're talking about. So yeah, you will definitely see that move from alts into Bitcoin, and it just it's a wave pattern. They move back and forth. It's natural. You can make money on both sides. You just have to watch the patterns, see what's unfolding. Okay, so you got, someone said they got in at 7,800. Actually, I just want to go back to Bitcoin. So we're actually watching Bitcoin while I'm doing this. That seems a little bit more exciting than watching Nano, right? So, okay. We can pay attention to this while we're talking. So you got in at 7,800, and so I'm assuming you got in at the bottom here, which, awesome. Awesome if you did that. That's great. Should you close your eyes and go long? No, I don't think you should close your eyes and make a trading decision. I think you need to make a trading decision based on good confirmation. of a breakout. And right now, there's not the confirmation for a breakout. We're actually seeing, we saw a retracement of a candle that looked like it was pumping. We saw that fully retrace. Now we're seeing a bearish candle, which could also fully retrace. So as far as right now, there's nothing confirmed to trade on. So I wouldn't blindly make any trade, if that's what you're asking. If you want to set a trade in the book for a breakout, you can do that. It is a little bit more risky. You can do it if that's something you want to do and just watch it. But just understand that you could get tagged in and the market could fully retrace and you could get stuck in and then we could do something else. So be careful. All right, so how much data do you use to backtest? It varies depending on what you're backtesting, and obviously the more data, the better. If you're doing something like Forex, you have a lot more data to work with. Probably a average or something to look at as a base would be about a year. Anything really lower than that, and you're really you're going to see. Well, let me rephrase that. You might think you're seeing something you're not. So yeah, the more data, the better. If you can get at least a year, that's going to be the best. We've done backtesting, and we continue to do backtesting. It's one of the things that helps us become better traders and to figure out what works and what doesn't. And as you backtest, you'll find that, okay, in this pair, this is how it often responds to this pattern. So for instance, I'll just throw something out there. I'm just going to use a fake pair because I don't want you guys to look it up and try and figure it out if it's real. So in this pair, X versus Y, when you have a bear flag, you often get 4 to 6 hours, and then you see an impulsive movement after another impulse. So impulse, 4 to 6 hours often, and it often just works that way. Some pairs you'll notice that you form more of a pennant rather than a flag. It's the same. It means the same thing. It just, so they all form similar patterns, and it's the same basic thing, but understanding that as you develop as a trader, it's just going to become clearer to you. So you're going to see it quicker, I guess is what I'm trying to say. And as you see it quicker, it develops, you're going to be like, okay, I've only got, 8 hours in this pattern, but based on past, I can just visualize that this is probably what's going to happen. And then as it progresses, you'll be like, okay, it's fitting that bill. So it's not, that's going to come with time, but it's definitely something that it will start to click, and you're just going to start to see things fit in. And also, for instance, you might have a corrective pattern like this. And what kind of pattern is that? I know it's sloppy, but if it came from an impulse, what is that? That's a bull flag, right? Now, what if it did that, and then it just started to correct like this? Has that changed the pattern? So you have to understand, if the pattern evolves, you might see a downward movement and then it turns into an upward movement and then a downward movement again. It's just making a bigger pattern. That can happen often. It happens a lot. And people will just see that as invalidating the pattern, and it doesn't. It's just the pattern trying to give you more information. So often, that's what happens in the market. And that's why people get tagged in and tagged out, because they're not noticing that a bigger pattern's developing. And that's why you'll often see that we'll develop our strategy. All right, Rahul. So as far as drawing the patterns inaccurately, or they are not being, they're not seeming to work out for you. So if you're using Bitcoin, obviously if we go to the weekly on Bitcoin, it's not going to give you as much information as a Forex chart. Forex chart, you should always start on weekly. But for cryptocurrency, you should never start lower than the daily time frame. Never, ever. And what you need to do is you need to understand the bigger time frame. Once you have the bigger time frame, then you can understand the smaller time frame. And if you don't understand the bigger time frame, you're going to draw patterns that just aren't going to fit on lower time frames. Let me just give you an example. Let's jump down to the 15-minute. And I'm going to just hide everything for a moment. And I won't be able to draw, because if I draw, it'll come back. But so we're on the 15-minute chart, and we don't have any information. We didn't look at the daily. We didn't look at anything. We just come in here and we're like, well, wow. So Bitcoin's just impulsing down. I need to get in on this. And then you have little information, you've been watching it, so you're like, well, there's a correction. So you wait a little bit, you see this correct out here, and you're like, okay, it's corrected out a few little bit. It's going to drop because it's forming a flag to drop. You can see things on a smaller time frame without understanding the big picture and assume something might happen that just doesn't correspond with the bigger picture. So going back to the daily, we can put our stuff back here. So understand the big picture. So impulsive, correction, impulsive, and then we kind of form this transition for a change in direction, and we move up. We have this impulsive, corrective, and then we form this bigger correction. So we have a lot of data telling us what phase we're in. This is a correction, and it's a correction from an impulse down, but it's a large correction. And Joe went over this, so you can rewatch the video to see what he said about Bitcoin. But understanding that bigger time frame, then when you start to break it down on the 4 hour, so now we're inside this pattern. Well, what pattern are we in? We're in a ascending channel, a bear flag pattern. Within it, we have an ascending channel, okay? And then if you have another ascending channel, what is the probability? So then probability keeps increasing as you got an ascending channel within an ascending channel within an ascending channel. So the probability just keeps increasing. And then you start to set up for the buy or the sell, whichever is happening, and you set your entry points. You get ready for it. So if it's not working, I would encourage you to go through charts. Start on, even if you're not going to trade Forex, start on Forex. Just go through charts, go to the weekly chart, and just start drawing the pattern. So figure out what it's doing on the weekly. Find the pattern on the weekly. Go down to the daily. Find it on the daily. Go down to the 4 hour. And then do the 4 hour and the 1 hour. And try to figure out where you're at. And as you do that, it's going to start to open up to you. It may take you a couple hours. It may take you a couple days. It may take you a couple weeks. But it will click. Because you're going to start to draw things, and then you're going to notice, okay, it just evolved. So for instance, let's say that you had something like this before this developed. Now, would that be considered a valid pattern? Yeah, we impulsed it down. But then we kind of just move back up, so it kind of invalidates it. So what we had before makes more sense. So you adapt the pattern to fit, not because of a bias, but because the market is giving you more information, okay? So that's I hope that kind of answers your question. All right, Mark. So what do we think about Bitcoin dropping to 6,000 again? And is that going to be a dangerous point for us if we do? 6,000 level is actually very possible. Obviously, because we're in this channel and it's ascending channel, a sell at least down to retest this area somewhere is not unlikely. So 67, 66, even 6,500 is not unlikely. And it's not something we should take off the table. Obviously, the dangerous part would be if we broke through that impulsively. And if we correct here and then break down, that's obviously going to be the more dangerous part. We'd be looking more in the 5,000 or 4,000 area. So, yeah, that's on the table. It's something that could happen. If it corresponds to Tether blowing up or an exchange like Bitfinex being seized or penalized or something, we're going to see a massive drop. It's just going to happen. But it's possible. I'd encourage you guys not to get into a panic mode. Just be calm. Be wise. Make wise decisions on where you trade, how you trade. But don't panic either, because you're not going to make money if you're panicking. So, all right. So as far as the head and shoulders pattern goes, it kind of looks like it could be a head and shoulders type situation in a way. I guess it depends on how this forms on the end. If that validates it, I guess that's the thing with head and shoulders is it is a valid pattern. The problem with it is that it can form all the way to the end and then just be invalidated at the end. So you can have days, or in Forex, you can have like weeks of a quote-unquote head and shoulders forming, and then at the very end, it just gets invalidated. And the only reason why that actually happens is because there's just a bigger pattern at play, and people aren't looking at the pattern. So if the pattern and the head and shoulders line up, I would say that gives it more validity. So the head and shoulders is like a confirmation. You got the pattern, and then the head and shoulders fits with it. Then I'd say, yeah, I definitely take that as a confirmation point. If the head and shoulders isn't fitting and it isn't validated yet, then I would keep a note of it in my mind, but I wouldn't base anything on it. Stratus, good question. How do we pick the pairs that we trade for the week? Okay, so Forex, it's based on setup. So every Sunday before the market opens at 5 o'clock, we go through all our pairs and we look through everything. We see where everything is closed. We look at the patterns. We adjust the patterns if need be. And we figure out what everything is doing. So what pairs are more likely to make a move, and if they're going to make a move, a bigger move. So we set them in the top of our watch list, and then we just break down our watch list. And then I'll have, on my list, I have, like 20 or 30 pairs. I have like the top 5 or top 7 that I'm looking at that I'm going to trade that week, that I'm definitely looking to trade that week. And then I have the rest that I'm just going to be watching throughout the week. So, every day I might just glance at them and be like, okay, is it moving? Is anything happening? And if something is going to happen, then I'll jump in on it. But I definitely have my watch list that I focus on, and I'll check them, a few times a day. I'll make sure that my entry points are set up. I know what's going on, and I'm ready for it when it makes a move. As far as cryptocurrency goes, I just kind of follow the patterns every day. So I'll be looking at Bitcoin and some other major pairs, and I pretty much am checking Bitcoin often because that's what we do with the channel and everything. So it isn't really based on volume or anything, but it's just kind of based on what I'm seeing as possibly moving. Okay, Monkey, good question. As far as shapes, why don't we use shapes? Well, it's not so much that we don't use shapes. Let me go back to the question on the harmonic pattern. So you have the bat, you have the butterfly, there's, whatever. You have a bunch of these patterns. And it's not that they can't be valid. But here's the thing. You can also overcomplicate this quite a bit. And when it boils down to it and you look at a lot of these patterns, the ones that are actually valid are pretty much, you can boil them down to the patterns that we teach. So what we teach is extremely simple. I mean, to steal something from the Geico commercial, it's so easy a caveman could do it. If a caveman was dedicated and he had internet, he could do it. That being said, it's simple. It's not easy. Okay? There is a difference. Sometimes the simplest things are the hardest because people want something complex. It's, like the story in the Bible where there's this guy named Naaman who, he had leprosy and he wanted to get healed. And the prophet said, well, go dip in this dirty little river. And he didn't like that idea. It's kind of like that story where, if it was something big, oh, sure, I'll go climb a mountain for you, but I'm not dipping in a dirty river. So it's kind of that idea that these patterns tend to boil down to something very simple. So they can play in. It's not bad to look at them. But if I was to tell you, you have to master, 150 shapes and understand them before you can be a consistent trader, that'd be daunting. But if I tell you, you just have to understand these few simple patterns. And if you want to add the shapes in, there's nothing wrong with that. There's sites like FinVids, there's sites like Investopedia that extensively talk about this stuff. There's nothing wrong with adding them in. But base your strategy on what really works, and this is what works. All right, do we use a fixed percent of the count when we trade? When we trade, what we teach and what we follow, because when I haven't followed it, I've lost a lot of money, is 1% risk. So you should never, ever, 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 in the worst losing trade of your life, lose more than 1% of your account, ever. Okay? If you do that consistently, then when you make profit, your profit is infinite. I mean, obviously, you're not going to make 1,000,000,000%, but there is no real cap on profit. Theoretically, the market could move for quite a ways, right? But your loss is always capped, so you never lose over 1%. So that just raises the profit ratio over loss. It raises your consistency to the point where it makes it a lot easier to be profitable as a trader. So never, ever make a trade where your stop loss or your point of exit would cause you to lose more than 1% of your account. Never do it. Johnny, that's actually a good question. Is it a good idea to trade crypto, meaning altcoins? Because if Bitcoin tanks, obviously the alts are going to tank too. That's very true. There is a point where when Bitcoin drops, you will see sometimes the altcoins will rise. It's just kind of that money flow back and forth. So there is money to be made in that, but obviously if you see a huge tank, for instance, if tonight we suddenly drop from 8 to 6,000, yeah, you're not going to see altcoins go through the roof. They're going to tank. So here's what I would tell you as far as that goes. Be mindful of what Bitcoin is doing. Understand what Bitcoin is doing. If Bitcoin is looking like it's setting up for a big sell, be careful about the altcoin trades you get in. If you're going to get in some that are ready and ripe. The thing about altcoins is they move really fast. So when they do break, a lot of times they'll break fast and quick. So a lot of times if you can get in on the pattern, you can get out within, 5, 10, 15 minutes, an hour, a couple hours, and make your profit and be good. I wouldn't hold coins for days or weeks that you're not willing to keep that money in as an investment. So be mindful of that. Understand the pattern. If Bitcoin is setting up for a buy, if it's not really ready for a big move, or at least it doesn't seem to be, you have a little bit more flexibility. But understand that Bitcoin, you should be watching Bitcoin. So do we, quote unquote, hodl any crypto? Yeah, we do have some. We did sell a lot of what we owned, and I don't think we've told people when that was, but I will be honest with you. When we did videos on the YouTube channel warning people of certain drops is when we sold some of our crypto that we were holding. Just because there's a point where you realize that some altcoins aren't going to be with us forever, and other altcoins are overvalued, and some of them are getting ready for big sells, and just a lot of information. But I do still own some. I believe Joe still owns some, and there's a few that I'm actually still got a lot of. Kin is one that I mentioned that I do own a considerable amount of, and I'm willing to risk it. I'm at the point where if it goes to zero and I lose it, I don't care. It's not going to hurt me. So there's a lot of the crypto that I am holding that is basically, for me, I want to either make a big gain out of it or I really don't care. I'll just hold it until, I'm an old man and I give it to my grandchildren, All right, so good questions on the 1%. As far as TradingView goes, if you're doing, for instance, if you're using the calculation to make a trade, I'm not basing this on anything. I'm just going to show you an example, okay? Actually, maybe I should base it so you guys. So let's see. Let's just do a breakout. So let's do a breakout here. So that's a pretty big percentage, right? It's about 4 to 5%. But this is the kind of stop loss you'd have if you were doing like margin trading in Bitcoin, because you could get tagged in and then it could impulse and then come back and you could get tagged out if it's too small. So how you do that is the percentage shown here is not the percentage of your account. You have to understand that it's different. It's showing you the percent, So, for instance, if you have $100 to invest, 1% of $100 is obviously different than 1% of $1,000, right? So your loss, your 1% loss for a $100 account is smaller than a 1% loss for a $1,000 account, if that makes sense. So that's always the goal, is only 1% of the account can be lost. But you also have to be wise too as far as what you're trading. If you're trading something that has a very low profit potential or a move that has a very low potential, then, be wise. Okay, just one moment. All right, so I was just talking to Joe about the Slack group because we're getting questions about that. I know a bunch of you are staying on because you want to hear that, so I want to address that now. So we're really excited about the Slack group, and people have mentioned Discord versus Slack. The reason we're going with Slack is because of the way it's designed. It's more conducive to the environment we want to create. It has some features that Discord doesn't have naturally or doesn't work well naturally. Discord obviously had some things that we liked, but we're going to try Slack. So that could change in the future, and if it does, we'll let you know. We'll see how it goes. So here's going to be the deal with the Slack group. We tried to do this as fair as possible, but we also want... Our number one goal in starting this Slack group is to provide a high-quality source of information, a high-quality community, a high-quality atmosphere. We don't want garbage. We don't want spam. We don't want shilling. We don't want nonsense. We don't want clowns. So we are so focused on ensuring that this is like literally the number one community for traders to get together, where it's an atmosphere, an environment that you can come and, Mr. B is encouraging Rahul, or whatever. I'm trying to think of some of your names. And, you guys are just, I want to see you guys encourage each other. I want to see you guys share charts. We're going to be sharing charts. I want it to be a great atmosphere. That is just like my number one concern. So this is the way we decided to do it, and we think this is going to be the best for everyone involved. So tomorrow, we will be sending out an email to everyone who is in the course. You're going to get immediate access to the Slack group. And with this access, we're going to be posting charts. We're going to be willing to look at your charts. You're going to be able to ask about certain pairs. We'll post charts for them. We're going to start it out with that for people in the course. The main reason for that is, again, we want to start out on the best foot. We want to give back to those of you who have already invested in the course. We want to give you the best. And thirdly, we want to do this as like a test, a trial run. And as it goes, we do plan to open it up to the public at some point. So those of you who are not in the course, don't get discouraged and feel like you have to buy. If you can't afford the course, we're not pushing you to buy the course. We totally understand that. If you just really don't have the money, you have a family, you're just stretching to make ends meet. Listen, honestly, we're not trying to push you to buy the course. So don't feel that way at all. If you can afford the course, I would tell you this. It's going to be the best investment of $400 you'll ever make. I believe that with all my heart. So if you can afford it, buy it now. There's no question in my mind. But if you can't, don't stress it. You're going to be able to get free information. We're still going to be here for you. We're still going to treat you like family. Not going to change at all. And at some point soon, we will be opening it to the public. Even though there will always be a private section for those that are part of the course, you will always get exclusive access to us. We will be opening it to the public so that those of you who can't afford the course and just anybody who wants to be a part of the community can be as well. So we're open to your feedback. Feel free to give your feedback on this. We feel like this is the best and most honest way to do it, and we feel like it's going to be a great thing, and we're really excited about it. So I really encourage you to be involved in it and give us your feedback on it. But those of you that are part of the course right now, you will get immediate access tomorrow. And we're really, really excited about that. And I have another announcement in a moment, too. I appreciate the comment that you guys love the team. You know, we really, really care about your guys' success. And I know that sounds a little cliche. It sounds a little whatever. Yeah, do you really care about? Why would you care about us? The reason why we do is there's like we feel a connection with some of you guys because we were there. We understand how it is to feel like this isn't working. Like, I can't figure this out. Everybody must be lying. I don't think anyone's actually making money trading. I think they're all crooks. They're just trying to sell me something. We understand that feeling. So we get you. We feel that. You know, a lot of you lost a lot of money. Some of you have lost thousands of dollars. And you're still here because you want to learn. And those of you, I'm just going to tell you, you're going to find success because that kind of dedication will not come back without success. It will take time, but you will find success because dedication will be repaid. So, yes, we do actually really care about you guys. We totally 100% appreciate the support we've received, the feedback, the comments. The community is just awesome. You guys are amazing, and we love you guys a lot. Losing money is not fun, but it's an experience, and it's a needed experience to learn the market. If you never lose money, it's a horrible way to get involved in the market. If you get in the market and you suddenly just make a ton of money, I guarantee you will lose your house because you will get overconfident and you will set yourself up for disaster. So coming into the market and losing money right away is probably the best way. It just kind of knocks you down, knocks the wind out of you, and sets you up for success because you realize you don't have this, you need to learn it. So it's a necessary part. Ames, wow, I mean, I don't know if you're joking or not, but if you really didn't buy a fridge to buy the course, I hope your food is still cold. But I mean, that's awesome. I love that dedication. I really love that. You know, that is the kind of thing that separates those who lose from those who win. You know, it's not the size of the intellect. It's not that traders have bigger brains than the rest of the world. It's just that traders are more dedicated. As far as the money back guarantee for the course, if you don't make back your money, I'll be honest with you, the feedback from the course and the amount of people that have signed up is just phenomenal. It's just been phenomenal. And we've only had one person ask for money back. Only one person. And the reason why they asked for money back was they actually didn't finish the course. They literally started the course, put 5 minutes into it, and said they disagreed with it. And so their bias overtook their ability to understand the market fully. And they decided it wasn't for them. And that's fine. No, I'm not here to ridicule them, but I am here to say that the reason they weren't successful was because of bias. So they weren't willing to look at this course objectively. They looked at it, the first lesson, decided it wasn't what they believed, and they didn't want to change their belief. They weren't open to changing their belief, and so they will never know the value of the course. But that's the only person who's ever asked for their money back. The rest of you have just been phenomenal. I mean, the feedback, some of you have even written us and said, you know, you're starting to make winning trades. You're starting to really catch on, and that's amazing. All right, Vincent. So you said you missed what we said about the Slack group. So here's the deal. Just briefly going to summarize the Slack group. We are releasing it tomorrow to exclusively to everyone who is part of the course already. So if you're already part of the course or you sign up tonight, you will get exclusive access to it tomorrow. We're going to do a trial run with people in the course, just kind of work with those of you who are part of the course, build you up, and then at some point we are going to be opening it up to the public. There will always be a private exclusive part for those who are part of the course. Just because you invested money, you deserve to get the best. I just feel that way. I just feel like if you put money in, you deserve to have the best. But those of you who can't afford it, like I said before, you have 6 kids and you're working full time, and maybe your wife's at home with the kids, you can't afford it. I totally get that. And I'm never, ever, ever going to push the course on you. There's people who sit there for 20 minutes trying to sell you the course. That's not us. You'll notice we don't mention it a lot. We don't mention you got to go buy now and there's, limited time off, or if you buy now, you get 20%. We're not into gimmicks. You know where it is. You know the value of it. If you can afford it, buy it. Otherwise, it is what it is. But the Slack group is going to be amazing. Totally amazing. If you are part of the course, you need to be involved in that. I cannot stress that enough. Get involved in that. If you're not part of it, share your feedback, and soon we will be releasing a section of the Slack to the public, and we will be in that as well. Tim, that's actually a good question here, and I'm going to be wrapping this up here within the next 8 minutes. So that's a good question. So not being able to find the trade, here's what I would say to that. I actually, before this went live, I moved to paper trading because we were actually going to show you something with paper trading and we didn't get to it. But set up a paper trading account. This should be cleared. Well, actually, I closed the trading profit, so it's not clear. So what you would do is you would just reset paper trading account and do it to like a reasonable number. Do 10,000 or 1,000 based on what you actually would potentially be able to invest. Set that up and just start making trades. Okay, don't do this whimsical. Act like it's really your money. Act like it's really your money. Follow our trading strategy to the T and set your 1% loss like it's your real money. Do everything like it's your real money. Set up your trades. If you fail a trade, go back and look at it, see what happens, evolve the pattern and see if you missed something. Write down in a notepad or in Evernote. I took BTC USD on Bitfinex. Take a screenshot. TradingView has screenshots. Take a screenshot, put it in Evernote, and say, I took a trade here, and show it on the chart. And then say, but, the pattern developed. I thought it was doing this, but it developed. Do that. At the end of every week, review your Evernote. Look it over. See the trades you miss, see why you miss them. And I will tell you, most likely, you will see patterns. You'll start to see patterns in your losses. And as you do that, you're going to start to catch on. Okay, a month ago, I traded this pattern, but I got in, got tagged out, it developed something bigger. And it's just going to start to click. And you're just going to see, okay, this is developing, this is a potential option, but this is the other things I have to be mindful of. So if you do that, it's going to help you immensely. It's paper trading, so if you do lose money, it's not a big deal, but treat it like it's real money. So don't just go, okay, I'm going to enter a trade, I'm going to sell, and we're just going to do, we're just going to do 1 million of these. That doesn't make sense. You're never going to have that amount. So be smart, treat it like real money, and it will change your perspective. If you're actually this is kind of like back testing. If you're actually going back and looking at why you lost trades, it will be eye-opening. Great, Ames. So glad it's helping you out. All right, guys. We're going to wrap this up. Just in closing again, if you're part of the course, we will be notifying you via email of the Slack group. Those of you who are not part of the course yet, keep your eyes and ears open for the announcement of the public part of that, which will be coming eventually. I can't tell you when, but it will be coming eventually. Thanks so much for joining us. As far as live streams go, we are planning to do these weekly. Next week, we will be out of town. We will be at a business conference, and so we will not be available to do a live stream on Sunday, most likely. I don't believe we will be able to do one. If that changes, I will let you know, but don't count on one next week. But except for that, we are planning to do these weekly, and we are going to work out times to try and make it as best we can. We are taking suggestions as far as doing shorter live streams throughout the week. We are looking into it, doing a mid-weekly live stream. If we do, we will be releasing that to those that are part of the course first. It may just be exclusively for those of the course. Again, we want to give value back to those who have actually invested money, but we also want to give to those who can't afford it. So we're trying to be as fair as possible in that regard, but we do intend to continue these live streams for the public. So for those that appreciate them, if you want to go ahead and give this a like and share it on your social media, we would appreciate that. If you do have any more questions or comments or feedback, any questions on the course, you can shoot us an email through Twitter, through our website. The link is in the description, or you can comment on one of our videos, however you wish to contact us. We do our best to answer as many as possible. I do think we get to most of them. Thanks so much, guys. It's been an awesome evening with all of you. To those of you who are seeing success, I just want to say kudos. To those of you who are still struggling, I just want to say don't give up. You will get it. It will click. Do not give up, because you give up just before you turn the bend and see the light. So stick with it. Work towards it. It will come. Thanks, guys. Take it easy. Peace.